Most view wealth as a simple accumulation of tokens. Collect enough, and you can trade them for a larger house or a faster car. Below a certain net worth, the experience of the economy is uniform. You wait in the same lines, pay the same account fees, and provide the same proofs to your bank as everyone else. The financial system isn't a single path, but a series of separate tracks. Crossing certain net worth thresholds triggers a move onto entirely different tracks with new rules. These shifts happen at 4 intervals: 50,000, 100,000, 1 million, and 5 million. Reaching these benchmarks allows you to move between different societal operating systems. Each level changes how institutions and the people within them respond to you. When your net worth is under $50,000, you are a data point. The system views you with inherent caution, requiring high levels of friction for every loan or line of credit. At $50,000, you reach a validity threshold. Lenders stop viewing you as a risk and start seeing you as a client. Car dealerships run your numbers and return with approvals in minutes. Credit card companies send you unsolicited offers for premium cards with travel rewards and lounge access. Because you have a safety net, your friends begin to treat you as a source of financial advice. At $100,000, you trigger the internal algorithms of major banks like Chase or Wells Fargo. These institutions use rigid tiered systems to categorize their customers. Crossing this line removes the small costs of being a customer. Monthly fees are waived. Instead of calling a 1-800 number, you are assigned a dedicated banker. Financial advisors who previously ignored your emails now return your calls. This security changes your behavior. You stop checking the bank app before every purchase or calculating a dinner split down to the cent. The people around you notice this change in your body language. At 6 figures, you are still a consumer, but the system has stopped charging you for the privilege of participating in it. At $1 million, the momentum of your financial life reverses. You no longer need to seek out opportunities. The market pulls toward you. Investment firms offer free portfolio reviews just to get a meeting. Luxury dealerships treat you as a guest rather than a sales lead. You are invited to private dinners, client golf outings, and networking events designed to keep your capital within their ecosystem. This visibility has social consequences. As your lifestyle becomes curated by these institutions, the financial gap between you and your old social circle becomes a social one. Family members may begin to look at your net worth as a communal resource. At $5 million, the legal framework governing your financial life changes. The SEC classifies you as a qualified purchaser, a specific legal status separating you from the general investing public. This grants you entry to hedge funds, private equity deals, and pre-IPO companies, investment vehicles legally off limits to everyone below this threshold. Banks like JP Morgan and Goldman Sachs begin managing your lifestyle as much as your money. They provide access to private jets, art vaulting services, and off-market real estate deals before they are ever listed on the public market. At $5 million, you've moved beyond the consumer economy. You are no longer buying individual products, you are paying for access to parallel systems. Reaching the highest tiers of wealth removes the friction of daily life. The logistical and financial hurdles that slow down most people simply disappear. But as this systemic friction vanishes, social friction increases. High net worth creates a new kind of isolation. You are frequently approached for startup capital or invited onto charity boards. The primary challenge shifts from growing your assets to identifying who is genuinely in your corner and who is there to extract value from your status. Your net worth dictates which version of the social and financial system you are allowed to inhabit. Now that you can see where these tripwires are located, are you actively building toward them?